Istanbul Chamber of Industry Turkey PMI rises to 40.9 in May. May 2020 key findings. Output and new orders moderate but at softer rates. Relatively modest scaling back of employment. Sharpest rise in input costs for a year. The latest PMI survey data from Istanbul Chamber of Industry and IHS Markit pointed to continued disruption to the Turkish manufacturing sector as a result of the coronavirus disease 2019 pandemic. Output and new orders slowed sharply again, albeit to lesser extents than in April, while firms scaled back employment and purchasing. On the price front, rates of both input cost and output price inflation accelerated due to currency weakness. The headline PMI posted 40.9 in May, up from 33.4 in April but still short of the 50.0 no change mark and thereby signaling a further moderation of business conditions in the sector. Further sharp slowdowns in both output and new orders were recorded in May as the COVID-19 pandemic continued to disrupt business and hamper demand. Rates of moderation eased, however, with some firms reporting that they had resumed operations during the month. Manufacturers scaled back employment for the second month running, albeit at a softer pace and one that was much weaker than those seen for output and new orders as the majority of companies kept staffing levels unchanged. A lack of new orders also led firms to moderate their purchasing activity, while also lowering stocks of both purchases and finished goods. Difficulties in terms of transportation due to COVID-19 restrictions meant that suppliers' delivery times lengthened sharply again. Receiving items from abroad was reportedly particularly difficult. Weakness of the Turkish lira against the US dollar led to a sharp and accelerated increase in input costs. Moreover, the rate of inflation was the fastest for a year. In turn, manufacturers raised their own selling prices. The increase in charges was faster than that seen in April and quicker than the series average. Commenting on the Istanbul Chamber of Industry Turkey Manufacturing PMI survey data, Andrew Harker, Economics Director at IHS Markit, said the Turkish manufacturing sector continued to be buffeted by the effects of the COVID-19 pandemic in May, according to the latest PMI data, preventing a swift rebound following a sharp slowdown in April. Rates of moderation softened, however, suggesting that the sector is on the road to recovery. As long as the virus continues to be brought under control, therefore, the move back to growth should follow in the months ahead. The COVID-19 pandemic continued to cause a marked slowdown in Turkish manufacturing output during May. That said, the moderation was much weaker than that recorded during April as some firms resumed operations after having been closed in the previous month. The COVID-19 pandemic and ongoing closure of some companies led to a further slowdown in new orders midway through the second quarter of the year, extending the current period of moderation to 3 months. New business eased to a large extent in May, albeit much less so than in April, as has been the case in each of the past 3 months. Turkish manufacturers signaled a slowdown in new export orders during May. The latest moderation was substantial, with COVID-19 causing issues with demand all around the world. A lack of new work meant that Turkish manufacturers focused resources on the completion of outstanding business during May. As a result, backlogs of work were depleted and at a sharp pace that was only slightly weaker than that recorded in April. May data pointed to a further scaling back of stocks of finished goods in May, extending the current sequence of depletion to 52 months. The pace of reduction was little changed from the preceding month. Where post-production inventories fell, panelists linked this to slowdowns in new orders and output. While employment was scaled back for the second month in a row during May, the pace of moderation was much weaker than those seen for output and new orders as around 86% of panelists kept staffing levels unchanged. The slowdown in employment was also softer than that seen in the previous month. The rate of output price inflation quickened in May and was faster than the series average. Anecdotal evidence suggested that the inflationary impact of currency weakness on input costs led manufacturers to raise their own selling prices accordingly. Turkish manufacturers indicated that their input prices rose at the fastest pace for a year midway through the second quarter. Respondents overwhelmingly cited weakness of the Turkish lira against the US dollar as having caused the latest increase. More than half of panelists signaled a rise in input costs in the latest survey period. Severe disruption to supply chains was signaled again in May, with delivery times on inputs lengthening at a rate second only to that seen in the previous month. Issues with transportation due to restrictions to prevent the spread of COVID-19 were behind delivery delays, with some respondents mentioning particular difficulties in receiving imported goods. Falling production requirements led manufacturers to moderate their purchasing activity during May and at a considerable pace. This was despite the slowdown easing markedly from the record seen in the previous month. Input buying has now softened in each of the past 3 months. As has been the case in each of the past 27 months, Turkish manufacturers reduced their holdings of purchased items during May. The rate of moderation was solid, albeit softer than registered in the previous month. Firms reportedly remained reluctant to hold inventories given slowing new orders. Business sentiment moved back into positive territory during May after having been negative for the first time in the series' 8-year history in April. Optimism was centered on hopes that economic conditions will return to normal once COVID-19 is brought under control. That said, confidence was still weaker than the series average, with a number of firms concerned that the pandemic will be prolonged.